Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Friday, August 14th, 2020. And here are our top stories. We'll take a look at how the crypto markets have performed over the last 3 to 4 months and the trend towards decentralized finance. Joining me now to discuss this and more is Kevin Kelly. He is the co-founder of Delphi Digital. Kevin, thanks so much for joining us on the program this morning.
Thanks for having me back, Jeff.
So let's jump right in. Let's talk about more about the crypto market and how it's done over the last 4 months.
Yeah, so you really saw the crypto market sell off with traditional asset classes back in late March. Again, a lot of that was due to just liquidity drying up. And again, assets like Bitcoin, even though we've talked about them sitting further out the risk curve, when it comes to trying to get liquidity, Bitcoin has a relatively liquid market. And so we did see, a number of fund managers and investors actually dump Bitcoin to shore up cash. Since then, though, if you fast forward over the last few months, as you mentioned, the crypto market has come roaring back. We've seen a significant outperformance of Bitcoin initially in the early days, but I would say over the last probably 5 to 6 weeks or so, we've really seen a resurgence in the alternative crypto assets, specifically around a lot of focus right now is around the decentralized finance space, or DeFi as it's more informally known. But no, the crypto market continues to really chug along. It's actually performing incredibly well. I do think we're starting to see a maturation of the space because the capital that's either coming into it or being reshuffled or reallocated throughout the crypto market is definitely being a bit more concentrated on investments or trades that one would assume actually have some type of potential fundamental value. There's still a ton of speculation in this space. And to be honest with you, it's not really something that we're necessarily against because, again, speculation can help drive the narrative. Price can really attract a lot of people to come into this space and grow the awareness of it. So it's still certainly a risky market to be in. But overall, long story short, the crypto market's doing really well.
What about stable coin? I've read reports where stable coin has grown. First, what is stable coin so that the audience understands? And then how has it grown over the last few months or last year?
Yeah, it's a great question, a great topic. So you've got a couple different variations of what stable coins would be, one of which USDC is one of the more popular ones, and that's actually backed one for one with dollar reserves, right? So you can actually go in, the beauty of the blockchain, you can go in and actually audit and see how much is kept in that reserve versus how much is actually circulating. You have a few other what we call more kind of algorithmically programmed stable coins that aren't necessarily backed one for one by dollar reserves, but they have different mechanics within them and different incentives that basically encourage people who are arbitraging to come in and maintain a very stable price, usually tracked one for one with the US dollar. So there's a couple different versions of stable coins, but by and large, one of the big reasons why you've seen a pretty sizable increase is one, just demand for dollars continues to increase. This is not necessarily a huge driver. I think, in my opinion, or our team's opinion, it's a bit more centered around, again, this DeFi space and having some type of stable asset that people can actually not only hold, but also capture some yield on top of. Because if you think about saving today in a normal savings account, right, you're getting sub 1% typically on an annualized yield basis. There are a number of DeFi platforms within crypto that allow you to take the same kind of stable coin or back one for one with the dollar, but achieve yields that are much higher in the kind of 4, 5, 6, even 7% range. So I think that's part of the narrative here as well.
Kevin, what about groups of the population? You always hear about millennials investing in cryptocurrency, but are there other, and I want to ask you about institutional investors next, but are there other, are there mature individuals investing in it, or is this just a millennial thing, for lack of a better term?
Yeah, certainly in the early days, I think what's interesting is a lot of times some of these narratives, like the DeFi narrative, will initially catch on with a more millennial base. But as teams like us come out with more research and as people put out more educational material around what's actually happening, you start to see a more mature and sophisticated investor audience wake up to the opportunities here. Because, if we're able to explain why something is moving or why the price of, X token is moving, and it does have some type of fundamental driver, that from an investor standpoint is very attractive, right? So I think part of it, initially the early stages of some of these narratives catch on with a more millennial crowd because we are used to transacting digitally, or it's much more native, I guess you'd say, to our generation. But as we're starting to see the build out of this DeFi space, you're certainly starting to see more mature and more sophisticated investors come in because the opportunities are that attractive.
And now let's talk about institutional investors. When we chatted a few months ago, still was a lot of interest among pension funds, endowments, foundations, other larger pools of assets. Where are we today? It sounds like things were coming back in general for crypto. Is it the same for institutional? Has it roared back as well?
Yeah, definitely. I mean, institutions, just given their mandate, and again, given the size of the entire crypto market right now, it's very difficult for them to really kind of fall down the proverbial crypto rabbit hole, right? They're largely staying in kind of the Bitcoin, maybe starting to explore with Ether, which is the native asset of Ethereum, but largely kind of staying at the top of that market cap or size segment structure. What I think is interesting, and it was an announcement earlier this week from a company named MicroStrategy that actually allocated about $250 million of their corporate treasury, right? So kind of their cash on hand to Bitcoin to try and diversify their treasury holdings. I thought that was a really interesting and quite frankly quite a big announcement this week, because again, it sets the stage for more companies to come out. Corporates aren't necessarily the first investor type, I guess you could say, when you think of institutions and pension funds and really kind of big capital allocators, but they are an extremely important and potentially large segment of the market that could come in and actually give some buying support to Bitcoin and as this market grows, crypto and digital assets more broadly.
Kevin, you mentioned Bitcoin a lot throughout this segment, but there are other, also mentioned Ether, or excuse me, Ethereum and others. How many different brands, for lack of a better term, of cryptocurrency are there? I mean, are there hundreds, thousands, millions? Have any idea about that?
Yeah. So by and large, I mean, there's the number of different estimates for how many actually exist. The total that exists is probably somewhere around 2,000 at this point. But I mean, the ones that there's more than half of those have pretty much no liquidity and no real value whatsoever. Some of it's actually just different teams just kind of testing out ways in which to build different cryptocurrencies. I would say there's probably 200 to 250 or so that people really kind of look at. And among those, I mean, really just the top, call it 100, 125 are starting to really get some traction. I do think what's interesting, though, and this is kind of one of our broader trends or calls for this year, is that you do see at the kind of larger size segment, you think about your Bitcoin Cashes, your Ripples with your XRP, a lot of the value proposition in those, I think the market is going to start waking up to and understand that those shouldn't be worth multiple or accrue multiple billions of dollars worth of market value. And we think that a lot of those, what we're calling kind of dead protocols, we think a lot of that money is actually going to shift into other sectors of the market like DeFi, where a lot of the biggest tokens, within the DeFi space still don't even crack, the top 50 or even some of them the top 100 in terms of the largest coins out there. So that's where we think the big opportunity is right now.
Yeah, I'm glad you mentioned DeFi, because when we come back, we're going to talk with Kevin about decentralized finance. What is it? What does it mean? What's the trends? You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
If you were like 58% of Americans, you didn't go to college. Or you did, but never finished. Maybe it's the thought of a big, intimidating campus. At Independence University, all classes are held online. Maybe it's the thought of being alone in a sea of students. At Independence U, you'll get a personal support team to help you every step of the way. Maybe it's the cost of all those books and supplies. Online means no books to buy. We even give you a new laptop and tablet to keep when you graduate. Maybe your life doesn't fit typical college classes. At Independence U, our online college fits your schedule. Let's meet a few students.
Independence University held my hand through the process.
Don't be afraid to take the leap because it has changed my life drastically.
Just take the first step and you can do it. If I did it, you can do it too.
At IU, there's no barriers to your degree.
800-535-9916.
Welcome back. We're talking to Kevin Kelly. He's the co-founder of Delphi Digital. Kevin, thanks so much for staying with us this morning.
Absolutely.
We had a great conversation in the first segment about the state of crypto. I mean, we tried to condense it down to 7 or 8 minutes. Always hard to do. People can certainly check out your research. Let's talk about decentralized finance. First, what is DeFi, just for myself and others?
Yeah, so DeFi, it can mean a number of different things, as is kind of tradition with a lot of what's going on in the crypto market. But, to me, DeFi is really kind of the build out of a parallel financial system that is much more permissionless and much more accessible than today's financial system, right? We've talked, countless times on your show about the intermediaries in banking, and while there are certain purposes that it serves, there's a lot of, I think, kind of waste or ways in which you can kind of displace a number of the intermediary actions that banks and the financial system actually conducts. And so the kind of premise around DeFi is basically trying to create this more open finance system, right? And so why that's attracted people and the way in which people have started to come into this space is just given where, yields are, for example, on, savings accounts. You as, and this could be somebody if you're in the US, if you're in a developing country or in a frontier market, if you have a smartphone and an internet connection, you can, go on, buy some Bitcoin, transfer that into a stable coin, as we previously talked about, and actually, stake that or put that into a quote unquote savings account in a DeFi app, and earn multiple or multitudes higher on the yield that you would expect to get in a savings account. So it's starting to bring people in where they're trying to, again, search for yield and really kind of grow their wealth. I do think, what we're starting to see around some of the speculative activity within DeFi is around these different kind of token economic structures. There's some really interesting plays that we've been following recently, one of which is just looking at something like smart contract insurance. And now there's ways in which people have constructed kind of almost a decentralized insurance pool against a lot of these different protocols that are coming out that, again, has very interesting token economics and ways in which, investors can get involved. But those types of ideas are very novel to us, and think it'll definitely pave the way for, again, this parallel financial system. To say that we're going to displace, the global financial system is certainly not something that I foresee, at least, in the short to intermediate term. But longer term, I do think there are a lot of potential benefits you can gain by, getting involved in this parallel system, I guess you could call it, that's being built out.
I was going to ask you about resistance. I mean, from what I've read around the world, you see governments embrace digital assets. I don't know if they embrace decentralized finance, but you definitely see the Federal Reserve. You see countries like, Russia, China, Venezuela, others embrace it. I mean, would you say that there's resistance to the DeFi movement and just embracing of digital assets? How do you look at it?
Yeah, it's a great question. And it's tough sometimes because when I say digital assets, that is, it covers such a wide breadth of different sectors and subsectors, right? And I think it's important because, again, as we've talked about, there's so many different nuances to each individual protocol within a subsector, let alone comparing the subsectors to themselves, to one another. You're seeing some resistance, I would say, in some of the stable coin growth that we've talked about previously. And that's in part just because, again, a lot of this is, audited code, but it's still very, very novel, very preliminary, a very nuanced industry. And so when you're talking about people's money and money security, really, that becomes very, very important, right? Because again, the last thing you would want is someone to put in their, life savings into some type of quote unquote quasi savings account within a DeFi platform and have that either get hacked or have that person lose all of that wealth, right? So it's extremely important because, the double-edged sword is a lot of this is immutable. What we are seeing is this combination between, central banks really racing to come out with their own digital currencies, which again are going to be backed by their fiat currencies that they issue, right? So a Fed coin would be, backed by the US dollar. I think what's going to be interesting is where those two intersect, right? Because on one hand, something like Bitcoin certainly could potentially, if it grows large enough, threaten the kind of sovereignty of a number of these central banks, right? Especially the ones that don't have as much independence, right, as something like the Fed, somebody like the Fed. On the flip side, I do think that the innovation happening in this space and just the camaraderie and this, quite frankly, the size of the communities that are growing within, decentralized finance and crypto in general, almost give this space too much momentum to go backwards, right? So what I think is going to be a very interesting kind of intersection is where you have policymakers coming out with not decentralized digital assets and digital currencies versus this decentralized world, and how all those interact. Are they going to be interoperable with one another? Could I, go out and buy, let's say, a Fed coin 3 years from now and actually put that into or stake that into a decentralized finance protocol that we've been talking about? How that interaction, occurs, to be quite frank, is something that, we're definitely monitoring closely. But it's kind of anyone's guess at this point because, again, regulatory concerns are certainly top of mind and probably the biggest, even though I don't find them to be a huge risk, probably one of the biggest risks that we face in this market today.
Yeah, I was going to ask you about that because, like anything else, a lot of times the regulatory framework has to catch up with new and innovative products. So is there anything, first of all, who governs this? Is this the Securities and Exchange Commission? Is it a different entity within the U.S. government here locally? And then I know that I've read that members of Congress and different, the Senate Banking Committee and the Finance Committee and others, or maybe it's the House Banking Committee, are looking at this closely. So how does that kind of work?
Yeah, so the SEC really kind of goes after, I would say, some of your smaller, more obvious, we'll call them scams or fraud type coins, right? And those are really going after unregistered securities, things of that nature. CFTC actually, for things like Bitcoin and Ether, for example, have actually come out and kind of declared them as more commodity-like, right? So they're not necessarily securities or wouldn't necessarily fall under the regulatory purview, I guess you could say, of the SEC. So those two, it's a very interesting dynamic because, again, you kind of have a lot of back and forth there. The point I think we get to is that the SEC certainly continues to not only monitor but crack down or try and crack down on a lot of fraud that's happening within that space. But I do think we're going to have to probably have some type of regulatory body that's specifically dedicated to this space, either launch or become, similar to the banking committee, have some type of digital assets committee that really starts to look at this space with a fine-tooth tooth comb and really goes through it, because right now this world kind of sits in a very gray area, right? It doesn't necessarily entirely fall under the SEC, wouldn't necessarily entirely fall under CFTC. And so I think when it comes to, at least in the US, the regulatory bodies that are regulating this stuff, I think it's going to have to be some type of joint effort, and where that goes, again, is anyone's guess. What I do think is interesting is that if you look abroad, there are a number of different countries that have kind of come out or been on the forefront of establishing digital asset strategies around digital currencies, crypto assets, kind of the whole kit and caboodle, so to speak, because they want to be on the front lines and attract capital and attract, startups and founders to those countries, right? So it is a really interesting opportunity for a number of these even developing countries to potentially kind of put their flag in the ground and say, hey, we are, blockchain friendly, we are crypto friendly, and if you want to do business and you want to build out, you want to innovate, come here. I think that's another really interesting opportunity, because it is a bit of game theory when it comes to the global regulatory landscape.
Yeah, I mean, it's absolutely fascinating just to think about the geopolitical ramifications of what this could mean. And I'm sure that there's a lot of wrestling going on in terms of what the Congress and the executive branch and others are thinking about. Kevin, we're going to have to leave it there. Really appreciate you joining us on the program this morning. Thanks for the great update. Look forward to having you back on the program very soon.
Absolutely. Thanks for having me, Jeff.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, and more, check out today's edition of The Morning Pulse. Don't forget, we're back again tomorrow for our retrospective show, BRN Weekly. We've got a very special guest. We learned about the UK retirement system. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.